Well, another day in which the market reacts positively to some different news out there. We're going to take a look today. Is it safe now to get back into stock? Are we going to have another dip coming up here? Let's take a look, see what we can find as far as this is concerned. So obviously you see the Dow's up nearly 5% today. Again, this is after last week in which you saw a decline, pretty big decline. Now today you see a pretty good reaction, and really, a lot of this reaction is based off of well, investors are enthusiastic again. People are excited to get back in the market. So there's an optimistic yesterday's coronavirus press conference was optimistic. New York State reported, which I hate to say, 594 deaths, which is horrific, but it came below the deaths on Saturday of 630. Slowing death in Italy and Spain as well. So people are hopeful that we can find that peak soon. And I do believe we will find the peak somewhere in the, probably around, it's horrific to say it's going to be right around Easter, but I think it is, even though that's such a sad thing. But definitely I think the week of Easter you'll find the peak, and I think from there we're going to start a decline, and I think that's very, very exciting stuff. I think it'll get rough for a couple weeks, no doubt. Week and a half maybe. It'll get rough out there, but I do think that we're going to get to the point where obviously we'll survive this. The recent numbers of estimated deaths has gone down actually in the United States. They estimated somewhere from 100 million to 240 million. That top estimate now has gone down somewhere closer to the, I think, 180, 160 million, or 160,000. We had a Joe Biden flub there. Yeah, I mean, honestly, I think we'll see that expectation decrease as well. Personally, I'm pretty confident if people are doing their job well and actually doing this social distancing right and following the guidelines in place, we'll beat this thing with a lot less deaths than we should. I'm slightly disappointed. Someone works for the public. People haven't been necessarily following them, but I have seen everyone pretty much wearing masks, gloves. People are taking the precautions, just not all of them. So there's positives, there's negatives, but I think we're gonna beat this. And I think everything will be good by June. I do genuinely believe everything will be good by June. That's my opinion on the matter. Mid-May to late June, I think everything will be up and running again. But the question is, what kind of long-term impact is this going to have on companies? To the point where, is it worth buying their stocks yet now, or what is it? Are we going to see a bigger decline? I certainly could see a bigger decline in terms of the market. I could see a general market decline of even around 10%, 15% from here, just due to the fact that if we reach that peak, I think investors are going to be freaking out. If the numbers climb again in New York, if New York numbers climb again, people will be freaking out. There's no doubt about it. But you've got companies that are really relying on revenue right now that can't get it. Think about the mortgage companies, right? If we're not charging people interest on their mortgages, these companies are pleading for help, as this says. So companies are asking for help. They need money to stay liquid. They need liquidity in order to survive. So this means selling off mortgages, which means down the road these companies are losing revenue because they're not making money on those mortgages. So it could be not good for mortgage companies, no doubt. And I certainly own two companies that really make revenue off of mortgages. So again, I'm not selling those companies. I do believe that we'll make it through this because I think overall we'll get out of this a little bit sooner than obviously estimates of July. I do think we certainly will. And I think companies will be back to normal shortly after. My concern, I think overall, as far as the market's concerned, I think unemployment's going to be not great for a little while. And I think the main reason is because in that stimulus package, the major boost to unemployment, I think will encourage people not to get back into the workforce necessarily. We will see. I think there's a good chance, especially married individuals, will get back into the workforce because, well, If you're a married individual, you know, staying in the house, trapped in with your significant other, you're probably going to want to kill each other. So let's just be 100% fair, especially if the kids are involved. Hooey, you're going to want to kill someone. So you're going to want to get back to work so you can avoid all that nonsense, because there will be fights. There's no doubt about it. It's just what happens when you're trapped up with someone. So my hope is that the workforce returns to relatively normal states. It'll be tough, obviously, because some of these small businesses that might not make it through this, I'm hoping the loans we're able to provide them for small businesses will be able to get most of them through. I really do. I certainly support small business all I can. We have a couple food trucks around here, which are small business, and I've been supporting them, getting food there, which, again, I try not to eat food out that much, but I've been trying to support them, the companies that do business with my company in particular, so definitely trying to support them, get them through some tough times. So let's hope most small businesses can, because they hire a lot of people. Big retailers are hiring people as well consistently, so we'll see. Maybe once companies are done furloughing employees, they can bring back more than ever to try to rebuild faster. So think about a couple companies that, you know, come to mind when you're saying things that aren't necessarily fair. That's what I think about this market. Is there are stocks that are going to be crappy to buy right now. I think there are, but I think there are some excellent buys too. I think there's a lot of companies that are being completely overlooked that no one really is thinking about. They don't think about the actual impact. Think about a company like Microsoft. Microsoft stock here, if we're looking on a 6-month basis, found a drop of around 30%, just like the market. Since then, obviously, we've seen some recovery, so it's only really down 14 from peaks. But a company like Microsoft overall seeks to benefit from this. Just think about Microsoft Teams. I mean, this is a service that has gained subscribers so quickly this past month. It has blown everything out of the water in terms of this. It's insane. We have Skype, stuff like Skype. What in the world? Skype is massive right now because of the fact that everyone's doing their business calls from home. They just are, as Skype's big. What else do we have? That's right, Microsoft Office. And I don't know about you, but people going to school, yeah, they're going to need Microsoft Office if they're doing school online for sure. They probably need it in their normal, school anyways, but now they especially do, because online school, sorry to say, I do it. It's mostly online assignments, written assignments. So, sorry, you're going to need Microsoft Office for that. So, typically the school will provide you with Office 365, but the school's got to pay for that, just so you know. So, just saying. There's money coming to Microsoft here. And guess what? Not only that, we have Xbox, okay? People are trapped in their home. A lot of the younger kids, too. Think about it. People from, around age 20, they probably don't have anything set career-wise that they're still at work. A lot of them probably work. Think about a movie theater. Think about concession stands. Think about stuff like that. These are places that aren't doing business at all right now. So these guys working these type of jobs, amusement parks, stuff like that, they're completely out of work. And I know for a fact, and I'm, young 20s myself, as someone who's 22, I would love to be just playing some video games if I had nothing to do. But I work, unfortunately, But if I had nothing to do, I'd be buying new games. I certainly would. I, just recently did buy a new game, but haven't had much time to play it. But it was only $3. Anyways, Microsoft seeks to benefit from this, no freaking doubt. Oh my gosh, they do. And just think about Microsoft Surface. They have a lot of benefits that they can get from this. They really do. And I think this stock seeks to benefit. I think it's a fantastic stock to look at right now. So I think it's been unfairly hit. And I think it'll do perfectly fine no matter what market conditions we have. Oh, Dragon Ball Z. That's gross. No one cares about that. Think about another one. Carnival Cruise. Carnival Cruise is a stock that has been, that's right, hammered over 80%. If you look at, let's get peak highs. That's right, around 81%. Around 81% this thing's been hammered. Think about companies like airlines, cruises, they've all been smacked. 80%. So what does 80% mean for Carnival Cruise? Well, it means they're trading at a market cap of Get this, $6.5 to $7 somewhere around that range. They're oh, actually, you know what? Current market cap is 6.25. It only goes down, but they now have a PE of 2 and a forward PE of 2.41. Are you kidding me? Price to sales of 0.29, price to book of 0.25, enterprise value to revenue 0.83. This is one of the most undervalued companies of all time. And people are pretty well pricing this as if this company is completely going out of business. That's frankly what they're doing. We're talking about a 6.25 market cap with a company making $21 billion in a year. So that the market cap is over 1/3 of that amount only. 1/3 of the market cap, or 1/3 of the average actual revenue. That is insane. What is going on there? I find it completely absurd. These stocks have been hammered beyond belief, and if they make it out of it, they're just going to go absolutely bonkers on the other end. The only concern for this company would obviously be cash. I mean, they've got no revenue coming in the door, but total current assets of $2 billion should be able to get them surviving through this. So, and I think about total liabilities, current liabilities of $9 billion. Definitely quite a lot more than those current assets, but this company should be perfectly fine to survive through. And it's not necessarily just saying Carnival Cruise specifically, but think about other stocks like this. Your clothing retailers, your movie theater companies, your what else we got? Amusement parks. These are things that have been hammered as if they're not going to see business for a full year. That's pretty well the damage that's been done to them. I mean, you talk about Carnival Cruise revenue. I mean, we're talking about years and years back is where they're pricing this at. $6.6 billion is where they're pricing this market cap at. We're talking 15 years back is where this is supposed to put this company. Are you kidding me? That's not how it works. I'm sorry. That's not how it's going to go. There's a lot of deals to be made in the market if you're smart about it. So I think it is still a good time to buy stock, and I do think it can go down further, but I don't think now is a bad time because a lot of these companies have had the effect more than priced in. And I think that may be an unpopular opinion, but I really do think it's true. You can feel free to disagree, and I certainly would understand if you do. Just, I hope you enjoyed, and have a good one.